Good morning. It is Friday, the 30th of July, and we are here again with another episode of Southbank Live, our live show where we discuss market events over the past week, highlighting some of the themes that you may have missed with one of our editors. While I'm normally joined by John Butler, he is away on holiday this week, so I thought I would bring on our editor, Sam Volkering, who is our resident crypto expert and also tech investor. Sam, thank you so much for joining me today.
G'day, boaz. How you doing? It's quite nice to join you. I feel like I've been subbed in off the bench to come in for that final 3-point game-winning shot.
Oh yes, quite indeed. We shall be we'll be discussing some of the game-winning shots indeed today when it comes to some of the crypto markets. I know a lot of people who are watching this are very much into crypto, as are you, Sam. I think you're probably the most immersed in the space that I know of, and we have discussed it many times before. But it's a very interesting space to be in at the moment. A little housekeeping for anyone watching: do feel free to ask any questions you would like in the chat. If you'd like to ask any questions for future episodes, if you're watching this as a recording, do feel free to leave them as a comment below this video. But just to start off with, Sam, what is your take on the crypto market at the moment? Because we have seen some very interesting action just over the past week.
Yeah, I mean, so at the moment, I've seen the term bandied around a little bit, people describing it as a crab market. Kind of it does what it says. It's a market that is moving sideways more than anything. Picture a crab, shuffling along a beach, crabbing along a beach, and that's kind of where the market's at the moment. Is it's just sort of bouncing around, doing its crypto thing, where some of the bigger ones like Bitcoin and Ethereum are just finding this sort of plateau level, and they're not really moving much either way. But then when you start to sort of look further out, there's a bit of movement again in the NFT space and around gaming, blockchain-based gaming projects. So there is still, it's kind of a multi-speed market if you're looking at it in terms of just prices, where, some of the bigger ones are just, as I say, finding that level, but then further down, looking at some of the other areas that are involved in crypto and blockchain networks and just decentralized distributed networks. There's still a lot of movement happening and a lot of new projects coming to the market, a lot of development happening. It's a really exciting space still. People get a bit caught up with price, which is understandable. But the development, everything that's happening is it's exciting. It's rapid. Everything's moving at breakneck speed.
Yeah, it's one of the things that I find is, I guess to my eyes at least, is unique to the crypto market in the speed, the pace at which it goes. As of course the market doesn't sleep, it's just 24/7, and like the internet, it's just on all the time. So development never really stops. While some developers are sleeping, other developers are developing. They're creating new ways of transacting value through some network or other, be it through Ethereum, be it through Solana, be it through Cosmos, any of these other platforms that they're creating, and indeed through Bitcoin, though to a lesser degree. It just never seems to stop. And so while, the dot-com boom, it took 10 years after the dot-com bust for the internet stocks to recover and to, achieve the destiny that was promised in the late 90s. For the crypto space, I mean, it took, 4 years for it to shrug off, less than 4 years to shrug off the 2018 bust, which is really quite remarkable. In terms of, my own observation of the crypto space at the moment, it seems some of the fear that existed over the past month or so has dissipated recently over the past couple of weeks, because Bitcoin has stopped falling effectively. And I wonder whether or not we've bottomed there, or whether or not we are in the March, it's March 2018 all over again, and everyone's getting their hopes up when in actuality, it's going to be a grim few years to go. What do you think?
Yeah, so there is a metric, a gauge that's used to sort of track that sentiment around the crypto market, and probably since the last at least four months or so, maybe longer, the needle's been down that end of extreme fear, with a lot of concern, a lot of worry about the wider market, and that needle's started to move back to the positive and just sits in the neutral territory at the moment, which kind of explains a lot. And that's because, all the bears that were calling, 10,000, 5,000 Bitcoin to zero, that obviously didn't eventuate, because it never was going to. And so that needle's moved because there's a sort of an overarching feeling that, well, there's been quite a lot of negative news and sentiment around everything from the exodus of miners in China to government regulation and crackdowns on the space. A lot of that, even when Elon Musk basically, coughed about, Tesla not accepting Bitcoin anymore and then changing his mind, flip-flopping around on that and all that kind of nonsense. And there was extreme fear in the market, but it didn't really kill off anything. Prices sort of came off the frothy tops of, was it like January, February, March, April, and it didn't kill the market. And people that are kind of newer to this space realize, I think now that, okay, well, there's some longevity here. There's, this isn't the flash in the pan. This isn't a fad. Albeit there are still those that call it tulip bulbs. Like, I think, was it the Man Group or whatever, that giant
the hedge fund,
investment manager hedge fund, that are like, oh, crypto's great to trade and we can make money on it, but it's all tulips. I mean, what a bunch of idiots, really. Frankly, I mean, what that demonstrates is it just shows the ignorance and hubris of some of these, gatekeepers of the traditional system. For them to still be calling these tulips, and for anyone that still genuinely believes that we're talking about tulip mania here, over a decade after Bitcoin launched, half a decade since a lot of the other spaces really started to evolve and develop. I mean, you got to kind of take a hard look at yourself, because it's far more nuanced and far more expansive than that. We're talking about a technology revolution and a cultural and social shift in power and control. And so anyway, I've probably gone off on a tangent there, but
no, tangents are fine.
Yeah, it's this. The space is still incredibly exciting with what's happening in the developments around access for people, around into blockchain interoperability. Even just things like how people can access wallets and utilize it as payments. I mean, you may have seen recently the Stellar Foundation that is behind the Stellar network. There was talks and rumors that they're looking to buy MoneyGram, which is the long-standing global remittance company. We're talking over $1 billion listed company that's in remittance, and Stellar, the rumor is that they're looking to acquire it. There's a lot happening, and it's not some flash in the pan. It's not some fad. It's definitely not tulips. There's this integration and this kind of transition and between the old world and the new world, and we're kind of feeling our feet as to what's going to come together, what's going to remain apart, and how it's all going to sort of move forward.
Yeah, it was very interesting to see the head of Man Group, which is a very, very large publicly listed hedge fund managing company. They run an awful lot of capital over there, and have quite a reputation. It was quite something to hear somebody still say it's just a tulip bubble again, but it's great to trade. The tulip thing has really I don't know, I would have thought it would have died off by now.
You would have thought.
As far as I'm aware, the tulip bubble did not suddenly reinflate 3 years after it busted and then go to new all-time highs all over again, and certainly didn't allow people to transact value from anywhere in the world with a internet connection.
The irony is that if he thinks that the crypto market's tulip mania, this is a hedge fund that deals in the stock market as well, right? I mean, come on, give me a break.
Yeah. Not the most, well, yeah, it's not the most reassuring to hear that these stewards of capital in the ivory towers are still viewing this that way. But in some ways, it is. It
proves a point, right? To be fair,
but it makes you more optimistic as a crypto investor, right? Because if these guys haven't got it yet, there's still an awful lot more people who have still to get it and who will later enter the market.
Yeah, absolutely. And I've heard that sort of phrase thrown about a lot, and it's kind of quite apt. Is that the average person, the average investor, the retail investor, whatever you want to call them, kind of has an opportunity to front run the institutions when it comes to crypto. You get to have a crack at these markets before like you say, the gatekeepers of capital in the traditional world really switch on and figure out just how much potential there is. I mean, that in all of investment throughout history, that's kind of like never been the case, is where the little guy gets to take those steps ahead of the big players. And you can't help but love that.
Yes, of course there are downsides to that, in that people who don't know what they're doing end up losing money because they're not familiar with it. But yes, I mean, it really does level the playing field in that anybody can participate and anybody can contribute too. I mean, it's an open source software. Sam, just in terms of some of the news coming out, I believe it's today. I could be wrong, but Germany has said that institutional funds, these are funds which cannot be accessed by the everyman, will be allowed to own up to 20% in crypto holdings. This is quite a big announcement. As far as Germany is concerned, how much uptake do you think that's going to get? Do you think there's much demand in Germany for that? Of course, they're very on the side of hard money because of their experience with hyperinflation. Do you think Bitcoin is going to be something that they're really going to hoover up?
Yeah, I mean, I think we've got to a point now where it would be. So a lot of these companies have to, operate, for a bunch of rules and mandates. And they have to obviously act in the best interests of their fund holder, the unit holders, or for listed companies, they have to act in the best interests of their stockholders. And it's now getting to a point where it's almost financially irresponsible for them to be not looking at something like Bitcoin as part of their holdings in order to maximize returns for stakeholders in whatever it is that they have. So if you're a fund or an big investment fund, and you have an allocation of cash, and you're not looking at how you can protect that cash against the likes of inflation and money printing in the economy, then you kind of got to ask yourself, are you really doing the full job that you should be doing? Are you doing all the due diligence on the available assets that are available to you in the world to generate returns for the stakeholders? And that's why we've seen some of the sort of more progressive listed companies start to shift Bitcoin into their balance sheets. There was it was called the B Word conference the other week, where Cathie Wood and Elon Musk and Jack Dorsey and the dude that's heading up Square Crypto had a chat about Bitcoin and crypto and everything like that. And Elon Musk was saying, our European accounts where we hold cash, where there's negative interest rates on real time, see the value of those holdings just get lower and lower and lower. And he said, and that they're the kind of accounts that we consider moving to Bitcoin to try and protect against that as a hedge against inflation. So I think that we're absolutely going to see investment funds. We're going to see more listed companies, non-listed companies, moving a portion of their assets, portion of their balance sheet into something like Bitcoin. Or, I say Bitcoin because that's kind of the first step for them. It's like
gateway drug.
Open the gate. Here's the first stepping stone. It's the gateway drug, because what you'll find is a lot of them, in terms of changing their constitutions or changing their investment strategies, tend to refer to digital assets or digital currencies, and don't get just specific on Bitcoin. And I think we'll start to see them expand that into other digital currencies or digital assets, other crypto assets. So, things like Ethereum or other, DeFi-centered cryptocurrencies, and a whole bunch of different strategies that they can look to implement. And look, they're not going to shift their entire balance sheets, because that would be then financially irresponsible of them. No one should ever go all in on one asset class. It's just not a smart financial thing to do. Albeit, I'm sure plenty of people do that on meme stocks. Different conversation to have. So I think we're absolutely going to see more and more shifting, a portion of, whether it's, 1%, 5%, 10%. And then you start to, tally up those numbers, and you start to look at the supply of Bitcoin or other cryptocurrencies out there. And then you start to, get your head around again this whole idea of increasing demand constraints on supply. And I think that's if we're talking about prices in fiat money, then you can't help but think that's a positive for the market.
Right. On the topic of DeFi specifically, we have seen the very curious case of a Goldman Sachs attempt to list a DeFi ETF.
Yeah.
Which does not seem to contain any DeFi. Would you care to expand on this, Sam, and tell us what exactly is going on here?
Yeah, I mean, this is like what we were saying before about them being late to the party. So Goldman Sachs have launched an application for what they call a DeFi ETF, but they refer to the term DeFi as digitized finance in the actual ETF application.
So the letter E is not really being being represented there.
It seems to be like they're applying for an ETF that they can get across the board that will allow for them to invest in crypto and blockchain based companies, but they're using the word DeFi itself to gather attention and probably get funds. And for people that perhaps don't necessarily do the due diligence that's needed on the actual portfolio construction of some of these ETFs, it probably will bring them more money than if they'd have just called it a digitized finance ETF. So, I mean, I'd hazard to guess if you asked, 100% of ETF investors, what is your ETF actually invested in? I would hazard to guess that very few of them actually know what the ETF is invested in, rather than just the sort of whole sector. So I think the Goldman thing's more a PR stunt with the name, and a more traditional ETF under the hood.
Yes. When you say it's like legacy sort of showing up late to the party, it's almost like Goldman's just gone to a completely different party altogether, and is charging fees upon entry, I think. Another story I think we should discuss is another curious case of an Amazon job listing, which got really quite out of hand. The rumors around this. There is actually a link to that in the description for our live stream if you would like to look at that job listing
or apply.
Yeah, Sam, what's your take on it? Because it is at one sort of exciting, but at the same time you can see how people could get the wrong impression, and it's actually not such a big deal.
Yeah, so there's two prongs to this story. One is the Amazon job listing, which does advertise for a digital currency and blockchain product lead, which I'll get to, and that's good news for a couple of reasons. And then subsequently across Twitter, somebody decided to post that Amazon is about to start accepting Bitcoin, and claimed their sources was an insider from Amazon.
And I think City AM covered that story.
And City AM covered the story from a tweet. I mean,
high quality. This is proper journalism we're going for here.
Yeah, look, I mean, there's so much of this happens now, is that people claim to have inside information and breaking news from sources and insiders, which is it's just made up, and it's made up intentionally, and sometimes it's even made up and intentionally tried to be funny about it. And people take it seriously.
Don't get the joke, yeah.
And they don't get the joke. So Amazon is not about to start accepting Bitcoin, and they've denied that in the short term. Now that cycles us back to the actual job posting, because why are they advertising for a digital currency and blockchain lead? Now, initial thoughts would lead you to believe that, okay, they're about to start accepting Bitcoin across their platform. Maybe. I think at some point they probably will start to accept cryptocurrencies for payment, because I think they'd be silly not to. And I think they're one of the companies as well. I mean, Amazon's also so big. I think what they make in this last quarter, like over $100 billion in revenue just for the quarter. They're so big that they actually probably don't care about the inflation, because it leads to probably more revenues for them and a bigger profits anyway. So, they may not necessarily be early to the party on shifting, some of their assets into blockchain for their balance sheet. Nonetheless, they are clearly obviously interested about the potential for these technologies, for blockchain and decentralized distributed networks and cryptocurrencies, and how they can be integrated into perhaps some of their products, how they could be used for payment. Because you've got to remember, Amazon's not just e-commerce. They basically run a third of the internet as well in terms of their cloud hosting. They got a whole bunch of pokers in different fires, from satellite communications and internet networks and a whole bunch of stuff. So it would almost be, again, irresponsible of them from a corporate perspective to not be looking down this avenue about how they can use it and integrate it into their business model to deliver better outcomes for their customers, for their suppliers, for their entire network. Because what you've also got to remember is Amazon itself is really just a giant network. They've created one of the most robust global networks that you could possibly ever think about. They whether it be online in the digital space through AWS, or through the physical space in transport and logistics and the movement of goods around the world through their e-commerce business. So, if we're talking about powerful networks, Amazon's is probably the most powerful one on earth. And again, it would be remiss for them to not be exploring this. And that's what I think the job title's there for, is to figure out how they can to start to utilize it. And there are plenty of interviews and video grabs of Jeff Bezos over time talking about how the customer is the obsession that they've always had, and the inventing and making sure they continue to innovate and be ahead of the competition, and deliver the products to the customers that they need. And I think this is, again, just one of those moments where they'll be looking to invent and innovate. And the outcome may be that they just end up with their own Amazon, digital currency that can be utilized within all their entire ecosystem, which, again, wouldn't necessarily be the worst thing in the world for them and their customers. But yeah, it's a little bit more nuanced than Amazon's about to just start accepting Bitcoin.
If Amazon were to launch their own token, there's already a cryptocurrency called Tezos. Do you think they'd get away with calling it Bezos?
Maybe the ticker could be Jeff. I don't know. I think the thing is that with Amazon, it's, again, when we're talking about networks, really, we're talking about the power of networks. And I think, again, I think they'll start to accept crypto, but I think the more likely outcome is that they will look to keep people within their own ecosystem as much as possible.
Yeah, similar to Apple always wanted to keep everybody inside that Apple ecosystem, be it through the apps, or be it through the Apple stores, or be it through just the products that they can interoperate
and
with.
That's why Apple have also recently gone down, with the Apple cards, the payment cards or credit cards or whatever it is that they do. Again, it's all it's getting a customer, and then it's keeping that customer coming back and giving them the experience to stay within that ecosystem. And that's what these companies do, like Amazon and Apple, and they're very good at it, which is why they're so worth so much.
It is somewhat against the principles of open source software, which so much of the crypto ecosystem is all about, really. I find one of the things very interesting about the DeFi space is where there are all of these sort of tokens where they've built a platform where there are liquidity pools where you can borrow and lend money, where you can stake money in order to earn some yield on it. But then, inside that, then there can be NFT marketplaces where people can buy digital collectibles. Inside of that, they can have an actual exchange where you can then get a lot of leverage if you want that for trading something. But then on top of that, they have these things called bridges, where it's a bridge from that entire ecosystem into another platform, another token with their own thing going on. So most of the time this would be for something like Ethereum or Binance Smart Chain. But of course, over time, there will be more of these. And it's interesting, I find it very interesting that willingness to bridge to somebody else's product and to somebody else's network. But well, I say somebody else because it's not one entity, it's another network. But I find it interesting that there are these projects which are deliberately trying to build access to another ecosystem, which is the opposite of what we're talking about when it comes to Apple and Amazon, trying to keep everybody in, trying to contain their customers that way. Sam, and as I say, to anybody watching this, do feel free to ask any questions in the chat. Sam, I thought it'd be good to run through a few questions I received ahead of time. We have received a couple from social media, and we also had a few emails sent through from some readers here at Southbank Research. Just to start one off, we'll start off with a very Bitcoin bearish email I received. We are always open to people who have completely opposite views or indeed very negative feedback. So here we are. Bitcoin really is the emperor's clothes. It is not real. It is a cyber fairy tale. Musical chairs for fools. Some smart people will make money selling it to fools, so when the music stops, the unwitting will be left with nothing. When world governments eventually kill it, all the Bitcoin in the world put together would not be worth a single gold sovereign. Why? Because a sovereign is real. That was from Jonathan. Jonathan, thank you for your email. Sam, how would you respond to that?
So many ways. I mean, so you could start with, if we want to talk about things that are real, then we have to, and things that aren't real, that, if we're talking about money, things that are real and things that aren't real, then we have to talk about money itself. The money that, is it Jonathan that wrote that in? When Jonathan jumps onto his, banking app and looks at the numbers in said app, how much of that's real? I mean, if we're going to question what's real and then say if it's not real, then it's worthless, then that a lot of that money in his bank account is not real as well, because that's how a fractional banking system works. Is that the amount of deposits that can be accessed for physical cash is not representative of the actual total money in circulation. So the money, cash as we know it today, a lot of that's not real either. So, I mean, I don't get that as an argument that it not being real doesn't make it, doesn't make it worth something. I mean, it's just such a non-argument, because all money, when you look at it, is effectively comes down to a belief system and a trust system as well. Knowing that, you can give X to person B in exchange for Y, and there's that trust that you will get what you require. The idea of a sovereign being real, okay, yes, it's real, but when we start talking about value. So why is a sovereign valuable? What makes it more valuable than the pebbles on my driveway? Again, it's a belief system.
Well, I mean, to fight Jonathan's corner here, I mean, when you have something like gold that has been refined down, I mean, there's only so much gold out there, very rare, and
there's only so many pebbles as well, though. So I don't get that as an argument.
The qualities of gold, where it's inert as a metal, so it doesn't react to things, is quite unique, and if it is a metal, not a stone, it has different utility.
But I'm like, there's plenty of other metals out there that aren't as valuable as gold. Mm-hmm. Again, I get why people value gold, and they value it because of centuries, arguably millennia, of this belief system being built up that it's worth something. And yes, it can be used. There is functional use to it that adds to that value. But likewise, so is something like Bitcoin. While it might not be a physically tangible item, it has use, it has utility. You can actually use it as an exchange for goods and services. You can use it as a transfer of value from one place to another through borders at minimal cost. So there is utility and there's value there as well. So yeah, sure, sovereign's real, physically real. But if you're talking about the value of it is subjective. Likewise, the value of a Bitcoin is subjective, and it depends on the number of people that believe in the subjective value and place subjective value on it. And it gets to a point, if everyone was to believe that it was to be worthless and that it had no utility or value, then he'd be right. But unfortunately, that's not the case. Same with gold, same with any asset, really.
I think it's interesting what we say when it comes down to trust, and money systems in general are all based on the trust that people have in that money system. And yet for Bitcoin, the ambition of it, or the what would be it? It's almost like the election the election campaign slogan is "Don't trust, verify," because everything is on the public blockchain. You can verify every transaction yourself if you have the desire to do it. So it's almost like when Bitcoin is attempting to get beyond the trust element of that, and trying to be its own thing. Do get a comment in the chat from George. Good morning, George. George says that Jonathan probably works for the government with a smiley face. Well, we couldn't possibly comment, Jonathan, but we do thank you for your email. It is always good to have some contrarianism here. We're not an echo chamber. It's always good to have people dissenting or disagreeing or challenging our views here.
I like these questions as much as they frustrate the hell out of me, because there's been such a long runway now of this having existence, growing in utility use. I mean, if we want to talk about governments eventually killing it all, maybe westernized governments, maybe the likes of US and the UK want to crack down on this because they see it as a genuine threat to the supply of money into their economic power. Because at the end of the day, the most powerful weapon that most central banks and governments have is their ability to control money. But then there's a whole bunch of other countries out there that want to break free from the shackles that they are often, inextricably tied to. So much as South America is tied to the US dollar. Parts of Africa still tied. Actually, to be honest, it's the world. The world is still tied to the US dollar in a big way. And if the US Treasury decides to the Fed continues to just rampantly devalue the US dollar, that's going to suck for a lot of these countries. And so they're looking at ways out of that and ways that they can decouple and regain some of their financial power and control. And we've seen this with El Salvador. We started to see it sort of flow through other parts of South America. We'll see it flow through parts of Africa and parts of Asia, where there are economies that are looking to use this as an opportunity to level up their economies and to lift their GDP and to lift the living standards of their people. And so while, you might find some countries will look to ban it or outlaw it, which very much plays into the rhetoric of them being authoritarian and totalitarian governments, which most of them, to be honest, are. There will be this kind of interstate, government competition for those that are looking to utilize it as an opportunity, even within countries. So even within the US, they're not all on the same page when it comes to, Senator, it was Elizabeth Warren the other day, talking about regulation around the crypto space.
Shadowy supercoders,
and then compared Bitcoin and cryptocurrencies to like the regulation of the drugs market. While yes, there's federally there's probably a line of reasoning that they have. You look at somewhere like Miami, which is basically saying we're opening our doors to innovation and development. We're welcoming crypto companies. We're going to start looking to how we can utilize Bitcoin within our economy. Texas has said that all of the Texas state banks can start to have roll out custody for crypto assets or digital assets and Bitcoin. So you're looking at states running that do have control and running their own finances and their own economies, as well as the federal side of things, that are saying, what, we're actually going to see this as an opportunity for our state to become better, for us to draw and attract jobs, because they see it as an economic opportunity as well. When you look at companies like Coinbase, CoinShares as well, Gemini, which is obviously now regulated in New York State. There are these big companies that are starting to develop and grow, and they bring jobs, they bring wealth, and they help contribute to economies. And so to shut that out, I think most governments will end up finding that's a mistake. and that we'll see, there's an element of regulation that's probably needed in the space, but at the same time, to shut it down like that or to kill it would be economic suicide, really, in the bigger scheme of things.
It does see the possibility of every government in the world acting in unison to stamp down on crypto seems incredibly remote to me. It does feel like one government shutting its doors will just create a greater opportunity for the government which doesn't. And I think that's what we're going to see, probably more of that. I think the countries which do want to really stamp down on crypto are doing themselves and their own citizens a disservice when it comes to the economic growth that they'll be able to get out of it. Sam, just on the note of thinking about, some decent regulation would be good to come to the space. We do have a question here, which I think has come from a gentleman called Samson, who I think, it does play to that idea. It's just a chap saying, I want to buy some Bitcoin, but have no idea how. I'm worried about scammers. I tried one and someone kept calling me and would not answer any reasonable questions. So just how safely can I buy into Bitcoin? Samson, that does sound like, it does sound like that's a rather shady operation there. You don't need to try nearly so hard and sort of need to engage in that way when it comes to people phoning you and things like that. That's really not required for buying Bitcoin. Sam, what would you say is the easiest entry point for somebody in the UK for buying Bitcoin? I would say Coinbase. What would you think?
Yeah, look, that's probably one of them. What people need to be really careful out there, because one of the worst things you can do is get advice on where to start from an influencer on social media. I literally was reading an article last night. It was on the really highly reputable news source, The Sun, about a lady that had basically been scammed out of a couple of months' wages because Katie Price had posted an Instagram post like recommending this guy as a great guy that could help people trade and guarantee to make money. And he was really just a shadowy, dodgy FX trader that was trying to get people to set up crypto.com accounts and was just making off with their money. And I saw another one recently from Australia where it looked like a legitimate news article from the ABC, which is the Australian Broadcasting Corporation in Australia, very reputable, or used to be at least reputable news source, saying that Eric Banner's latest investment strategy was this, and it links out to typically they're shady forex traders that get people to send money into an account, and it's basically just a Ponzi. Once you send it in, you never see it again. There's a lot of that stuff about these celebrity endorsements and the guaranteed incomes and all this sort of stuff. It's just super shady.
Yeah.
If you've gone to a site because of what an influencer has linked in an ad post, you've just got to not do that. You've really got to stay away from that stuff. Most of the time, they're scammy as all hell. You've just got to go to reputable, trusted sources, people that aren't going to scam you out, businesses that are regulated. Like we are at Southbank Research. We are an FCA regulated business. So, our reputation, our business, our livelihood is on the line. If we do the wrong thing by the FCA, people go to jail, right? So you've got to go to reputable, trusted sources. There are some great resources out there that you can find. You mentioned some of the exchanges. Go to the exchanges directly yourself and set up your own account with your own passwords. Don't ever get anyone else to do it for you, I think is important as well. If you're not sure about how to do it, again, that's why we provide those sorts of resources through Exponential Investor and at Southbank Research about how people can take those early steps about doing it for yourself. And it's one of the most important things with cryptocurrency and people that are looking to get into it and get invested is that you have to take on that responsibility of doing it yourself. If you are not prepared to do it yourself, if you just want to handball it over to someone else, I would say just don't even bother. Don't even bother with it if you're not prepared to take that responsibility. But if you are, then you can go to exchanges. Coinbase is a very good site to do so. Gemini is another one. I mentioned those earlier. They're two of the better, bigger ones, certainly in the UK. I mean, I know I've missed probably a dozen of others.
Yeah, there are plenty UK-based exchanges, but I mean, just in terms
they're
of
great starting points, really.
A great starting point. As Sam says, I mean, you really, I would thoroughly second that comment that it has to be you doing it. If you're going to do it, you need to do it yourself. Never ask somebody else to be sort of your intermediary there. I mean, the whole idea with crypto is that you're getting rid of intermediaries in general. So it's not really in the spirit of things if you're going to ask somebody else to do it. But just as a general starting point, Coinbase does make it very easy. They do have, they of course, you do pay them a fee for purchasing cryptos for you. But this is they are an intermediary of their own right. That's how they make their money. But they're very simple, and it's quite very straightforward through Coinbase. So if you do want to take that step, Samson, we would point you in that direction. And well done for I think narrowly avoiding getting defrauded there. That really didn't sound like a very, very good situation there. Now we do have some other questions. Actually, there was one when we're talking about banking and things like that. We did get a very long question that came through from Marcus. Marcus, thank you very much for your email. A very sort of in-depth take when it came to banking and how this relates to some of the crypto side of it. So this is from Marcus. Marcus says, I follow Sam and I have been on crypto for about 4 to 5 years now. And as I've been buying the dips, I have done very nicely. Thank you very much. There you go, Sam. Well done there. Nice. But what I wanted to mention was, having had nothing but dreadful customer service from a couple of British banks, which I won't name for fear of any rebuke, I thought I'd take another look at the UK Bank and Building Society Trustpilot ratings. So just taking a look through Trustpilot at the banking reviews and the Building Society reviews on Trustpilot, and it is utterly shocking. All of the main high street names, without exception, score 80% 1 star, the lowest possible, with excellent 5 stars rated roughly 10% of the time, with then just the other proportion scattered in the middle rankings. I'm guessing the 10% excellent scores come mostly from the bank and from the marketing teams. Now, I've been in market research as a profession in a previous life before becoming independent of working for others. So I appreciate folk are far more likely to write on Trustpilot to complain than they are to praise. And even accounting for that, these figures are shocking. When you look at what people are complaining about, I'd say the high street banks are sinking. I haven't seen this covered in the national press, but I'd suggest this is a stunning piece of data that would suggest folk are pulling their money out of the banks in droves, brackets, those that have any, close brackets, and going to the newer app-based banks, or moving a lot of money into crypto. This is as good as a slow but sure run on the banks. This is a ticking time bomb. No wonder the powers that be are attempting to FUD/clamp down on crypto. This could be the black swan that sends markets into freefall. Let's face it, there are so many black swan potential events, it's hard to choose which one it will be. When a certain unnamed UK bank wrote to me to tell me of their stunning new savings interest rates of 0.0001%, I just don't know how their marketing department can keep a straight face when writing the copy, whilst I've made over 1,000% in crypto over the past 4 years. I pulled almost all of my savings just before the Brexit referendum. I put it into Bullion Vault Gold, brackets worked out well. So that Bullion Vault is a gold custody website that you can that anyone can access. And since then, I vowed never to put my savings back in the banking system. How many are like me, I wonder? And yet I see figures in the press that there's huge amount of savings, record amounts in banks and building societies. I find the latter hard to believe, and Revolut still can't make a profit. Anyway, just thought if you're looking for a subject to discuss, this could be the basis of one of our articles or one of our live streams. Always love reading them. That's from Marcus. Marcus, thank you very much for that very interesting piece on it all. Sam, what do you make of that? Do you think? I mean, there's lots of sort of sides of that to dissect. Loads of bad reviews for UK-based banks. Same time, terrible interest rates. At that same time, do you think there's sort of a slow run on the banks where they're going to these, the banks, the app-based banks, which don't actually have any physical, outlets?
I think retail banking is dead to the high street bank, and it's the app-based banks with low overheads, virtually no physical or most of the time no physical outlets, so they can keep the costs to deliver services to the retail banker, the retail person, very low. There is absolutely going to be a shift from the high street banks, but those big banks, they don't make their money on retail banking. They're not typically their profit centers. They don't make money on deposits. They make money on lending. That's wholesale lending, corporate lending, institutional lending, and mortgages. And that's going to be pretty much their bread and butter. So I don't see that changing, but I absolutely see people shifting their savings to a lot of the new banks. You also have to consider demographics, and when we talk about increases in savings and savings rate, and the media reporting on more savings than ever before, again they're not necessarily telling you the full picture, because they're not saying what part of the demographic is all that saving going into, where is it happening. There's an element of over the last 18 months that savings rate has increased just through sheer default, because people haven't been able to go and spend it in the economy as they typically would, which means that it's going to continue to increase the savings rate. I think you'll see that fall off. There are certainly some that are moving it to crypto because they can start to see that there are ways in which you can utilize the crypto system to generate yield and interests on in certain ways, far in excess of what you'd ever find in the traditional system. And the more that people are starting to wake up to that, the more that they're shifting a portion of their funds into those mechanisms. And I think we'll see that continue. I think we'll see a continued shift away from the high street bank when it comes to retail banking and deposits and savings and things like that, to the neobanks, to the likes of Revolut, to Starling, to Monzo, or all the other different ones that are about, and some of the newer crypto banks, if you want to call them that. They're not technically banks, but that's kind of in the crypto world how you would almost view them. A shift to that, and a shift to, and this is something we've spoken about before in the stock market as well, is the hunt for yield. If you used to get 4-5% from your fixed interest investments, which you're not now, and you used to get dividends from regular dividends from dividend paying companies, which over the last 2 years now has sort of dried up. Where are you going to get that income from? So there's this hunt for yield, which means that money shifts to higher risk investments, looking for the capital return on it rather than the income yield. And it means movements into something like crypto and new assets like that, where you can shift a smaller portion, but potentially open up for larger returns. Also, obviously managing that risk reward trade-off with it as well. So there's a lot of moving parts to that question, to be honest. And again, probably just opened up another Pandora's box for another discussion for another day. But it's multiple moves, but it all comes back to being triggered by, I think it really was triggered by in 2008, and then the subsequent 13 years of quantitative easing and money printing and manipulation of fiat money and traditional financial economies and the global financial system by central banks. And that's led us to the situation that we're in today. If none of that had happened, we probably wouldn't even be talking about Bitcoin or any crypto. But that's the world we live in now.
Right. So in terms of your take on when it comes to sort of retail banking, as it were, so you think sort of retail banks, there's somewhat something of a dying breed, but they're still gonna corner that sort of mortgages and deposit market. They're not going to make the average.
No, the deposits they'll have will be the deposits that they've had. It'll be pretty much everyone that's over the age of 50 will probably continue to bank with the high street banks. So it's a demographic thing as well. And when that demographic shifts over the next 30 years, then I'm not talking about retail banking necessarily being dead from the high street banks in the next 2 or 3 years. I'm talking about a 30-year shift, which is still bloody fast for a lot of those banks that have been around for 100 odd years. Yeah,
there's that saying that people change their spouses more often than they change the banks, because once you start with your bank, you generally, it's not very often that people do change it, and those habits are very bad to break. So I think people would need an awful lot of confidence in certainly in crypto to go over there. But with some of the newer apps, you can definitely see the millennials and the Zoomers are getting really into that.
You made an interesting point there about confidence, right? As well, is that even pre-2008, so a lot of the people that will continue to use the traditional banks, all their experience in banking is before that as well. So that's a legacy confidence and trust. Again, it comes back to that idea of trust in those banks, which is why they'll probably continue. But if you're a millennial and you've grown up in a world and you've received income and you've tried to be financially independent in a world from 2008 onwards, then you have no trust in those legacy institutions. You don't have confidence in them. I don't have confidence in them. I don't trust them as much as I would some of the smaller, the neobanks that are looking to do things differently and are much more customer centric and customer focused. And then obviously the crypto system as well. And I would consider that I'm probably towards the start of that generational shift. So everyone sort of from me and below, from, I'm not quite 40 yet, but everyone in their sort of, I'd say mid 40s to early 40s and younger, that's that demographic that I think is going to be the ones that really don't, go to the traditional institutions anymore. And that's when we get to that age of really holding all the wealth as the boomer shift of wealth transition, kind of happens. I think that's when the big retail and traditional high street banks are going to be in a lot of trouble.
I would love to see a statistic for how many as a percentage of Northern Rock customers are into crypto or something similar. You do wonder how that would shake somebody's beliefs in queuing outside Northern Rock for hours and hours and hours on a hot sunny day, wondering whether or not you're going to be able to get your life savings out. You do wonder how that would change somebody's perception, how open they would then be to more subversive financial sort of projects like crypto. Sam, we are getting on for time a bit, but there are a couple of questions I would like to run by. Two of these I think we could probably bundle into one, because I imagine your answer may be roughly similar. We did get an email from Dilip, who said, which 5 under 10 cent cryptocurrencies currently will do really well in 2021 and 2022? Interesting, the 10 cent being the qualifier there. And another and there's another. Hi Sam, this is from Harry, who says, if I was brand new investing into crypto and was going to invest a pound amount, what percentage would I split into Bitcoin, Ethereum, or Cardano? Now, I imagine your response to this will be roughly the same for both of these, Sam, but on you go.
Yeah. So we obviously can't give financial advice. We can't give advice, personal financial advice to people, which that would be. But what I can say is that we have a plethora of resources available through Southbank Research. You could head to exponentialinvestor.com, check out a lot of the material we have on there. Again, continue to do some research around what we say about certain, the crypto space and areas of opportunity. And then obviously through Southbank Research, we have our various publications where we do cover off on specifics around crypto, and we provide recommendations to our subscribers about how that can be achieved. But unfortunately, in the public domain like this, we can't give personal financial advice like that.
Quite right. But we do provide an awful lot of research. Sam, you write an awful lot of research on the crypto space at Exponential Investor. I would encourage anybody who's watching this to give it a go. You can sign up for free. It's just exponentialinvestor.com. A couple more questions, Sam. What do you think about ZU coins? That's ZU coins, soon to launch. And another one, do you believe FinTrucks and or B token to be scams? And if so, have you looked into any possible recourse? Sam, go.
Right. So I'll cover off on the ZooCoins one first. I'm actually an advisor to the ZooCoins project. So with Southbank Research, I need to ensure that there's no conflicts of interest and keeping all involvements like that at arm's length. So that means I can't comment on ZooCoins.
Well, I mean, if you're, if the question is broad, what do you think about it? If you are an advisor to the project, Sam, you must see there is some merit in it, right?
Yeah, look, I mean, I can say, look, they're developing. It's a new network based on a new decentralized distributed technology called Split Chain, and Split, and within that comes a whole range of different use cases and utility, the ability to instantly and fee-free transfer around the place. But look, as I said. If people want to go check it out, they can head to the ZooCoins website. They can see it on social media and stuff like that. But unfortunately, there's not much more I can say. As I say, in order to keep just to keep everything at arm's length.
Yep. And on Fintrex and or B token.
Yeah, look, as for Fintrex and B token, they were two of the ICOs that came during 2017's ICO boom. Look, no, I don't believe they were or are scams. They certainly haven't displayed scammy nature. I think B token has failed though as a project, I believe. So I mean, it's much the same as investing in a crowd-funded company or a startup. Is that, you know, you go into these with the right intentions and you go into these with the belief that they can deliver on what they say they can deliver on. Sometimes they do. I know Fintrex is still operational from what I understand. B token I don't think is. Sometimes they fail and sometimes they succeed. And unfortunately, these two, well, B token looks like it's been one that's failed. And as for Fintrex, then yeah, it is operational, but I'm not sure there's a whole heap happening at the moment, but they are still going.
Right. I mean, we should always remember that crypto is the wild frontier. I mean, this is the wild west of finance, and you know, all of the all the enterprises that start out there, you know, they don't have a huge amount of recourse that they can do. And you know, if you're venturing out there as an investor, it is an incredibly speculative and risky place. So if you are interested in getting into crypto in any way, you should always be very, very careful. I would say that if it were a real market, a physical market that you could go into, you would definitely want to be carrying a gun were you about to venture in and buy a few things, because you know, it is very much unregulated, all things considered. There isn't very much recourse that you could get, so you have to be very, very you have to be very independent and very, very responsible and careful, because there are shady characters out there. While Sam, as you say, you don't think B token or Fintrex are scams, there have been all manner of scams throughout the crypto ecosystem, and there probably will be for some time. You need to be very careful about that. Sam, any closing comments you'd like to make for today's Southbank episode? We have covered an awful lot here, but it remains. You know, we could probably carry on talking about it for quite a long time. What is there any closing remarks you'd like to give?
Yeah, I think people need to sort of just look at the crypto market with an element of patience and just calmness, because it's quite easy to get worked up about, you know, when you see prices moving rapidly or see the mainstream media reporting about nothing but prices. You can feel like you've missed the boat, or you can feel like it's too risky, or you can feel like it's too scary, or you feel like you're going to get scammed out of, you know, your money and all that sort of stuff. And there are absolutely risks in the market. All of those things, there are dangers that you need to be aware of. And there are dangers in all markets. There are dangers in the stock market, and there are plenty of people that get ripped off when it comes to investing in stocks. And there are people that are getting ripped off with the money sitting in their bank account earning 0.0001%, while inflation is at about 4%. So there are risks with everything. What you need to do is to make sure you get quality, reasonable, rational, logical, smart, nuanced information from trusted sources. You need to make sure that you understand how to do things before you go about doing them. But I think it's important that people take on the responsibility for themselves to do these things. And while it might seem daunting and scary, to have the patience to learn, because I think that will be worthwhile, particularly when it comes to the crypto space, because it builds a foundation for people to then springboard forward from, which I think, you know, becomes a lifetime skill, I suppose, more than anything. So yeah, source the right information from the right people, be patient, but do it yourself.
Quite right, quite right. I do notice, you know, earlier on in the stream, we were saying, you know, you should never take any advice from, you know, social media influencers and the like, because of course there are some shady characters out there. Here we are, of course, you know, you could have just stumbled across the stream or this video, not knowing who either of us are, and here we are saying, you know, take our advice and don't take anyone else's advice, kind of thing. But you know, I think everybody.
Well, I think the other thing on that is that you can basically check up on us. You can call Southbank Research and speak to people and get the background information you need. You can see our credibility. You can see that we, you know, our business is regulated by the FCA. That I've been in a financial advisor going back, you know, 15 years or something like that. You yourself have been an IFA in that space too. You know, background, credibility, all those sorts of things are important. If you can't find that information or you can't have it access to hand, you could people could write to you and me, and they'll get a response from you and me. And so that sort of transparency is also critical. And that's why we can say what we can say, and we can help people the way we can.
Quite right, quite right. Yes, in my past life, I wasn't specifically an IFA. I was just the FA, just in case anyone wants to nitpick and then say, they were lying on YouTube or whatever. But yes, we both, Sam and I both were in the financial advice industry prior to our jobs here at Southbank Investment Research. But that is all that we have time for today. We've gone on for an hour. It's now 11 a.m. on a fine Friday morning. Though I say fine, it's been pouring with rain here in Cheddar. Hopefully everybody who's watching this, hope you're having a nice time and have a good weekend. If you have been, streaming in to us live, I hope you've enjoyed it. Do feel free to leave any feedback either in the live stream comments, or if you're watching this as a recording, do feel free to leave some in the comment section below, and to subscribe if you like these impromptu streams. We're going to be doing quite a few more of them in the future. So any feedback, anything you'd like to see more of, do let us know. But that's all for the moment. Thank you so much for tuning in with us today, and we shall see you in the next one.